I'm Ari Redboard, and this is TRM Talks. I am Global Head of Policy at TRM Labs. At TRM, we provide blockchain intelligence software to support law enforcement investigations and to help financial institutions and cryptocurrency businesses mitigate financial crime risk within the emerging digital asset economy. Prior to joining TRM, I spent 15 years in the U.S. federal government, first as a prosecutor at the Department of Justice, and then as a Treasury Department official, where I worked to safeguard the financial system against terrorist financiers, weapons of mass destruction proliferators, drug kingpins, and other rogue actors. On TRM Talks, I sit down with business leaders, policymakers, investigators, and friends from across the crypto ecosystem who are working to build a safer financial system. On today's TRM Talks, I am joined by Joey Garcia of Xapo Bank. But first, inside the lab, where I share data-driven insights from our blockchain intelligence team. In mid-June 2025, Israel's drone and missile strikes on Iran's nuclear and military sites triggered a coordinated cyber financial escalation. On June 17th and 18th, the hacker group known as Predatory Sparrow launched a twin cyber offensive targeting Bank Sigba and Nobatex, Iran's largest crypto exchange. These strikes disrupted critical financial infrastructure and burned approximately 90 million in cryptocurrency, transferring it into inaccessible addresses as a clear geopolitical statement. The dual assault illustrates the fusion of kinetic action with financial warfare targeting Iran's sanctions evasion ecosystem. TRM's in-depth report, New Drones, Old Tactics analysis, underscores that Iran relies heavily on crypto platforms like Nobatex to sidestep international sanctions. These exchanges serve as dual-use infrastructure, providing a lifeline for citizens grappling with inflation, while also channeling resources to proxy groups like Hezbollah, Hamas, and Yemen's Houthis. Nobatex's strategic importance make it a precise target. TRM analysts refer to it as the central artery for moving sanctioned funds via crypto rails, a critical enabler of Iran's global financial footprint outside traditional banking channels. The timing of the hack immediately after kinetic strikes signals a new combined arms doctrine, crippling physical and financial nodes simultaneously. TRM continues to scan on-chain activity to track residual fund flows from the burnt Nobatex wallets and any rebuild from remaining reserves. Now, I sit down with Joey Garcia. Joey, thank you so much for joining TRM Talks.
Great to be here.
What really caused me to reach out was it was probably almost a year ago now, which is crazy. We were together in Philadelphia at Penn. Wharton puts on sort of a really big digital assets summit or roundtable. And I was just really sort of impressed with your insights, particularly around MiCA and a lot of the work that was going on in Europe. I felt like you really brought that expertise to this discussion. And really, since then, I was like, all right, we have to have him on talking about sort of not only what's going on in Europe, but really the rest of the world and your journey to the space.
You know, it's a really interesting story. I mean, it was actually way, way back. And I don't think it's because I'm particularly smart. I've just been in this space for so long. I've accumulated so much information today. So it was back in like 2013, 2014, this guy called Wences Casares, who anyone who's active in the Bitcoin universe knows who Wences is. He came out to see me in Gibraltar, this little tiny jurisdiction on the southern tip of Spain. He started talking to me about the Bitcoin ecosystem, what this was, what this technology was built to do, his story, which is also really, really interesting. And again, you speak to anyone from any of the, and Argentina is a good example. They've suffered like 3 currency collapses in one lifetime. And they had this concept of a unit of value that wasn't within a sort of governmental central control system. And that was a bit of a trigger for him. So he said to me back then, this is going to be the future. And he's a great, very convincing guy. And he said, the biggest gap though that's going to work, if this is going to work in a really secure, tried, tested way that's going to grow, be adopted and become more, let's just call it mainstream, the biggest gap is the rules, the regulation, the framework. So back in 2019, when the FATF made their famous recommendations, and you mentioned MiCA, and we've had wonderful Genius Act news the other day, that's all wonderful. But in 2013, 2014, it was like a totally alien concept. So I went to the small jurisdiction, the government of Gibraltar, and I said to them, you know what, guys, let's do this. Let's create a sort of working group. let's develop an actual prudential framework and develop a secure environment for what can actually operate in the space. Back then, if you tried to call a working group with a group of regulatory authorities in 2013, they all thought you were absolutely crazy. I mean, there were, I think, one famous meeting, there was like a police officer that was asked to come to the working group meeting. So it was pretty wacky stuff. But that's what sort of started the journey. And you mentioned Warsaw. I mean, that was in 2013, 2014 that I met Wences and triggered the whole thing. I was part of those Warsaw and RegTech initiatives back in 2017, where again, it was like 8 lawyers around the table arguing about what a security was or whatever it was. And lots has happened and developed and everything since then. But that was the original kind of trigger, let's look at a blank slate. Let's not try and take the approach of taking this new, innovative, growing, developing ecosystem and wrap it within an existing regulatory structure. Let's literally build out a purpose-built framework for creating a secure environment. And that's what developed this whole concept of principles-based approaches to regulatory standards and everything. So
what's so really extraordinary about your story, and I do think a lot of it goes back to the promise of Bitcoin for you, like really understanding the technology and the need for it. You used Argentina as a great example, but there weren't a lot of people having these conversations, as you said, in 2013, which is really the early days of Bitcoin itself. And there were no other digital assets at that point. But talk me through a little bit, what were you doing in your life? And what was it about Bitcoin and this technology that really related to you? And then what did you do when you sort of went to the government of Gibraltar? You started to build out a framework. Tell me about your journey through that period.
So I was a lawyer in practice, in financial services generally, and I posted a lot of things, did a lot of sort of work in the fund and the hedge fund space, but always sort of investment services based. And that's why, my background was there. But I think when you talk about regulatory or legal legislative standards for this environment, it's that same story I'm sure you've heard a million times. What is the right balance between supporting a standard of innovation that's going to allow a new technology to flourish, but balancing it with, let's call it, the consumer protection sort of layer that my mother and my daughter and everyone else can gain access to this in a secure way. And if you think about the emergence of all new technologies, I mean, whatever you like, the internet, the first adopters of new technologies are typically not the great guys. So it can be the gambling industry or the illegal file sharing systems and et cetera, et cetera. I mean, listeners are amused to say you'll do it on Spotify or whatever it was. Back then, when we had the Pirate Bays and we had the Napsters and everything else, illegal file sharing systems, they were the early proponents of developing infrastructure. It was the rules that allowed the Spotifys and the Tidals and the Apple Musics to develop. And that's the way that I thought about this. I mean, this is like, yes, you can hear the bad story. Oh my goodness, BTC is only used for money laundering, et cetera, et cetera. But I mean, you probably know quite a bit around on-chain analytics-based systems, a lot more than I do. And you've got to learn and see how that actually works. You've got to understand it. And you've got to have those kind of levels of engagement with the authorities. You've got to ask them the open question. What are the risks that you think exist in this universe? And I'm going to show you how to address those risks in an innovative and new way. So you can't look at old systems and old rules. You have to have an open dialogue. You have to have that discussion. And that's where sometimes small jurisdictions move very, very, very quickly. They have the appetite, they have the desire, they have that willingness to test and push things. So
to that end, I mean, there's no better example than Gibraltar. You talk about a tiny jurisdiction that has moved relatively quickly, I think in large part due to some of the work that you've done. Talk me through a little bit about that journey for you. You mentioned working groups in 2013. How did sort of that develop? And I do think it's been a bit of a model for larger jurisdictions.
So if you think about really, really detailed, like rules-based systems, and I suppose MiCA could be one of those examples, the difficulty when you're trying to regulate a very, very fast-moving environment is if you develop very, very strict rules, a very, very codified set of standards, they can become outdated pretty quickly. So the idea there was to develop, let's call it, principles. So the core fundamental principles that could then be applied and developed and emerge and change with the technology. So you'll always have to comply with the principles, call it risk management, protection of client assets, governance structures, system security, financial crime prevention. Those are very simple principles. No regulator in the world is going to disagree with that. But how do you apply them to this world in a new and innovative way to satisfy the authorities, and how you're going to do that. So that was what developed. And obviously back then, and to an extent, it's still the case today, like people want clarity, they want security, they want a future plan of 5 and 10 years. They don't really want to sort of be sitting there waiting to see what's going to happen and emerge and develop. And that's why when we built that, the framework, I mean, if you think about the platforms that sought that license, Xapo is one of them. Bitso, the largest platform in Latin America. I mean, Bullish, everyone knows the Bullish platform now. That was a Gibraltar license as well. Amax are one of the biggest in London. The Huobi Group are one of the biggest in China. I mean, all of them came to obtain their licenses in Little Gibraltar because of that.
It's absolutely extraordinary when you think about, look, I mean, I think that we've had different licensing regimes, and I think we're starting to develop consistent standards across the globe. I think US market structure will be absolutely critical to that, but we have MAS in Singapore, we now have MiCA,
Yeah.
and it's really extraordinary that tiny Gibraltar really led in many of those respects. So tell me about, obviously you mentioned Xapo as having a Gibraltar license. Tell me about your sort of journey to your current role there.
Yeah, so Xapo, this is really interesting. Everyone sees the news every day about, we heard the JP Morgan news the other day. Everyone knows the BlackRock ETF numbers. I was at the Goldman Sachs event in London. The Goldman guys ran a massive event in the city of London. It was 850 asset managers or something, whatever it was. And that's all really, really great to see. Xapo is not a bank that's exploring blockchain technology and the Bitcoin ecosystem. We're the diametric opposite of that. We're a Bitcoin and blockchain native business that's obtained a banking license. So starting in the olden days, very, very simple wallet provider, and that developed through to wanting to issue a card that was linked to your BTC. That didn't exist at the time. We were first to do that, all the way through to obtaining our principal membership of Visa, MasterCard, etc. But it went from the BTC into the card, into e-money, all the way through to the full-blown banking license, which we obtained in Gibraltar, then passported into London. But it is basically, let's just call it the convergence of those two ecosystems in one environment. But we're a bank that's Bitcoin native. We're not a bank that's exploring Bitcoin.
It's a really important distinction, but it really is sort of, is it two sides of the same coin, arguably, right? Like we see all of these traditional financial institutions who are now trying to figure out how to experiment with cryptocurrency, whether that means custody, whether it means issuance.
Yeah.
But you're sort of the other side of the coin, right? This is a Bitcoin native business experimenting with what it means to be a bank. And is this the future of the ecosystem? It's both sides of that coin, essentially?
Yeah. I mean, look, I think I find it all like fascinating. So I think that the future of finance it's not going to sit between sort of choosing traditional banking or digital assets. There has to be a seamless integration between the two worlds in one environment. So we want to be an institution. Look, we recognize that customers want the security, the regulatory protection of traditional banking. Very, very simple. If you want to buy a house, if you want to buy a car, if you want to pay for your flights, whatever it is, all the classic, you want to put your savings aside in USD and all the basic stuff. People want to need that in a secure, tried and tested environment. But we want the hybrid approach that doesn't limit us to existing sort of only banking solutions. We want to digitally and natively allow those two ecosystems to operate together. So to give you an example, yes, we can be part of SEPA for Euro payments and FPS for Sterling and Swift or whatever for ACH for USD. But we want blockchain native payments to be allowed to flow. So stablecoin payments into your bank account and out of your bank account. So blockchain native payment rails into your bank and out of your bank. Plus, as I say, we are fundamentally a BTC native business. So the other day, the BlackRock guys announced they believe that a 2% allocation to BTC would form or could or should form part of a balanced portfolio. That's great. But we've been saying that since 2013. So we've been pitching that message and we haven't gone into all the other virtual assets and we haven't gone, the whole objective of the business is to protect, store and grow your wealth. And we think, and I've always thought, that BTC should form part of that portfolio in a secure environment. So I do think that convergence is happening. It's happening more and more. I think the bridging of the two financial worlds, but as we've said many times, we're very different to traditional banks, but we're also very different to crypto native platforms. So crypto native platforms are, and you know this very well, they're sort of exploring what regulation is. And the regulation that existed post the FATF recommendations in 2019 were largely kind of compliance frameworks. That they weren't really supervisory prudential frameworks. So then you start to have the FTX style scenarios, and you have platforms that don't really understand what segregation of customer assets is. And you have a risk team that have like 6 months experience running billions of dollars of assets trading across the world. It doesn't really make sense. So what we're seeing is the world developing away from those pure, simple compliance frameworks into more kind of traditional ones. But the crypto native businesses are not really like that. They're learning. They're sort of coming to terms with a lot of that stuff and coming along the way. And it is one of those. I often use the example, like if you open a bank account in New York and then you open another bank account in Australia and another bank account in, I don't know, Singapore, choose your destination. There are a lot of equalized standards. They're not exactly the same, but the capital, the infrastructure, the governance, there are some basic infrastructure pieces that are the same. In the crypto world, that doesn't exist. So in the crypto world, nobody does extensive DD on a crypto native platform before they open an account there. They tend to be more influenced by Twitter or a couple of influencers and a couple of things they've heard or seen, or the quality of the website, that they don't really look at that. And that makes us, extremely, extremely different. We are a bank. So things like consumer protection as a standard, where you talk about the requirement to have fair value and fair pricing and acting in good faith and avoiding foreseeable harm and products and services, price, value, consumer understanding, all of those things apply to banks, but we apply them to crypto as well. And that is completely different to how most platforms in that space work.
There's so much to unpack there, but let me just dig into that point a little bit, because I think it's a really, really important point. You mentioned FATF several times, the Financial Action Task Force. It was just really the global standard setter for anti-money laundering. But I would say that so FATF is purely anti-money laundering, terrorist financing, illicit finance. And this is your point, right? Like you can have the anti-money laundering piece here, but really there's so much more when it comes to compliance, particularly for a financial institution. And Xapo and the work that you've done for years is a financial institution. And that's why I think it's so interesting. You do wear so many hats, because a lot of people I'll have on the show will be a chief compliance officer, right? They'll only be dealing with the anti-money laundering piece. But what you're telling me is there's just so many other parts of this, not just even consumer protection, which maybe you would argue goes into that same bucket, or market abuse, right? But it's also these issues around commingling funds and stability issues and the types of things that you're supposed to do as a financial institution. That to me is really, really interesting, because I feel like you uniquely understand the different layers of what is required of a bank today.
Absolutely. So, I mean, the FATF, when they published those recommendations in 2019, everyone knows that. People maybe didn't track as much detail, the follow-up a year later and the year after that. And they started sort of pointing a little bit towards concepts of market integrity, but transposing that. And I mentioned this to you briefly earlier. I've done a lot of consultancy work for the United Nations, and through the UNODC, I've trained, assessed a lot of regulatory authorities around the world.
Well, let me stop you there, because I think that's just really, really interesting work. Talk me through a little bit. How did you become connected with the UN on these issues? And then talk about specifically your role there, because I think that's a really fascinating part of your journey.
So with the UN, they were writing a manual for enforcement agencies in the Southeast Asia region. They invited me to write one chapter of that book, and I did, and I predicted a lot of things, and I pretty much got all of them right. So I was so right, and they came back to me and said they wanted to go into a little bit more detail. So I said, okay, look, these are the FATF recommendations. That's wonderful. Now I'm going to show you what's actually happening in the world, in the space, what the activities are, what the platforms are doing, how the technology is being used. And I ran a very detailed gap analysis between this is where you think you're regulating things and this is everything that you're missing. And we did a and I did that across, 12 or 15 countries. And then the output of that is obviously going to be, well, how do we manage that risk? What do we do? And this is one of the problems when the FATF or an international body issues a piece of guidance. IOSCO have done the same. FATF and a money laundering piece, IOSCO, that's a real kind of regulatory standard. But when you speak to lots of these countries, a lot of them will say, well, there's just so much to do. We need to start at the base layer. Please don't talk to me about DeFi. I want to understand what a custodian is and how an exchange operates and who can issue a stable coin. So if we start with that, And that's the thing. Jurisdictions and authorities are relatively slow moving in that context. But I started doing some assessments. Then I started doing some training. Then I started running very, very detailed sessions, and they'd be 6 hours on DeFi and approach to, I don't know, the concept of embedded supervision or whatever it might be, exploring sort of ways that they could address risks. And that just developed and developed into lots of different areas. But that piece has been very, very fascinating. It's fascinating to see how different all of the jurisdictions are and how they operate. And how do I put this? The concept of regulatory arbitrage is extremely, extremely real. And you can see that when you actually deal with some of the authorities. Some of them look at virtual assets or the definition of what a virtual asset is in a very different way. It's not, not all virtual assets were created equal, that they're all different pieces of technology operating in different ways. So they have to start by learning, and they all have slightly different approaches. Then they all have different approaches to the activity that's being conducted. Some of them don't believe that there's any decentralized finance operating in their jurisdiction. And then you show them the data and they get like pretty scared by that. And then some people say there are no issues with compliance risk within DeFi. And then you show them a set of liquidity pool risk reports and they get a little bit scared by all of that. But the long shot is I've had lots of different pieces of experience. Let's call it the advisory and industry insights. I've been very, very directly involved with the industry in many, many different ways for many years. And you learn about different jurisdictions having different risk tolerances or regulatory philosophies. They have different implementation approaches. And you have to understand those variations if you want to deal in different markets. Then you have the regulatory perspective and the policy side of things. How do regulators make decisions and what factors influence the policy developments is always different.
Let me dig into that a little bit, right? Because so if Joey Garcia is starting from scratch today with a regulatory framework, right, there are differences across jurisdictions, right? Gibraltar, MiCA, what's being built in the US, what's happening in APAC and Singapore and Korea and Japan. What would be just a few tenets that you would see as providing the legal clarity that you need, but not stifling innovation as you build in a crypto native business, a crypto native bank?
I think authorities they've got multiple competing objectives. So they want to protect consumers, they want to maintain financial stability, and they want to prevent financial crime and foster innovation. And of those four, it's always going to be a focus on achieving the right balance. So if you only focus 80% on the fostering of innovation and you create extremely light touch frameworks, you have a huge problem. And if you go diametrically opposite and you get so fanatical about you basically stifle and just force migration out of the region and everything else. So there has to be a collaborative approach, and there has to be an openness to having those discussions with the industry. I mean, I always call it the concept of regulatory innovation. So it's not just an innovative industry, you need an innovative regulatory industry. And if they start to think about that and conceptually start to understand, then that will absolutely help them develop things in the right way.
Not to put you on the spot, but where do you think this has been done or is being done really well today?
I don't think it's been done very well. I'd say with things like MiCA, and I was part of the whole Libra DM initiative, and we dealt with a lot of the e-money token and the significant classes of assets that could be issued within the EU. I think the EU has gone way, way over the top. It's far too prescriptive. Yeah, I'm not a big fan of the FSB or the Financial Stability Board. That sort of very famous statement: same risks, same rules, same regulation. It isn't the same risk. I would prefer the statement similar risks, similar rules, and similar regulation, because you can apply the same principles, but you can't do that. I would say most tend to react in a very panic driven way to negative events. So the FTX is a big trigger. Now we have the Bybit questions of the other day, and people become obsessed with security standards, and it becomes very reactive, and people get very, very nervous. And then when they get very nervous, they overstep. To prevent that, if you want to have really effective development, policymakers and authorities have got to understand and recognize that, like, regulatory delay, firstly, it creates more problems than thoughtful, proactive regulation. So if you wait for perfect information and the perfect time in the perfect environment and zero risk, and you're never going to help shape an industry. You need like authorities that are going to get out there and have that discussion and be open to the concept of flexible regulation. I think that the US has a real opportunity when it gets to the next stage. And I'm going to throw a guess out there, but if they do get that right, it will become very much a global hub. And I don't think that the EU, I don't think that the UK, I don't think that Singapore, I don't think that Japan are going to become the global hubs. I don't think that they've got their approaches right. And I think that's going to be a bit too, it already is painful for some of those groups, and it's going to lead to other issues.
What I really love about this conversation is like, I think it uniquely understands that you need sound regulatory frameworks to allow business to grow. This
Yeah,
ecosystem has been growing at an extraordinary rate over the
yeah.
last few years. Obviously, the price of Bitcoin is just one example, but I think really so many more. What are the things that you're most excited about? Whether it's that intersection of banking and Bitcoin or cryptocurrency, or sort of things that you're seeing built out there. What are the things that really, really excite you as you see the growth of this ecosystem?
I get excited personally in that we've been professing like the same message for so long, and so much of the world is now jumping on board. I do think that the convergence of the fully regulated financial services world and the developing crypto ecosystem are coming closer together, and that's very, very exciting. But I do still think that there's a lot of stuff that needs to happen. That there's still too much of a fragmented approach to, I don't know, I mean, I keep saying DeFi, cross-border coordination on lots of things. That's a big problem. I'd love to see a world where the two universes are even closer together. So, for example, a yield generating based decentralized activity that was constructed in a way that a bank could offer to its users, let's call it permissioned access to the right networks, institutional grade custody and key management, all of these things that institutions need to see, but built out in a way that can allow a more active interaction with the developing world. That's very exciting. I think the mainstream integration piece is happening a bit, and I want to see a lot more of that. But I'm excited about the convergence future, if we want to call it that.
I think one of the cool things that's really cool in speaking to you, and I know this is true, just knowing you a little bit, that like, I think you've really turned your career into a passion, or your
Yeah.
passion into a career. I mean, you love this stuff, right? You pretty much found perfect role for you. So we know Bitcoin, we know crypto is a passion. What are you doing when you're not thinking about crypto, regulation, policy, banking?
Always challenges. So
What hobbies, interests? What sort of keeps you sane in this crazy world?
So I'll tell you a funny one. At the beginning of the year, I told my daughter to set like an impossible challenge, and that I wanted to show her that whatever challenge she picked, we were going to make it happen. And I was hoping that she'd pick like a half marathon or something. And we picked a 36-kilometer swim from Capri to Naples. So it's a 10-hour
Oh
fast
my
10-hour crossing.
gosh.
Trained like an absolute animal for the year leading up to that, and we did that a couple of weeks ago. Got it done, so that's very exciting. So now it's on to
Joey,
the next challenge. That's
I have asked that question to a lot of amazing guests. That may be the most amazing answer.
it's a
I
crazy
am
one. Yeah,
absolutely blown away.
it was a
How do
tough
you
one.
feel after accomplishing something like that? Like,
Your arms don't move. It hurts when you think. Everything hurts. But I've done that. So I mean, the guy, everyone who knows me well, I'm a rugby guy by birth. That's my sport. But then I took up cycling. I took up triathlon. Started doing some little short events. Got into the longer stuff. Got into the half Ironman. Got into the Ironman stuff. So I'm definitely a pusher. I'm completely the wrong construct for a long distance athlete, but I do it anyway. So
oh my gosh, I love this so much. I've often joked that I'd be an amazing triathlete if I could bike or swim at all, but I definitely need to get you out there for a run.
yeah.
And I just, even what, obviously, like, as someone who's really not a strong swimmer, I've always wanted to be one. Even thinking about what goes into the training to do 36K, like, and in open water, which is a
Yeah,
whole other dynamic in terms of
exactly.
like the fear
Yeah,
factor and all
yeah,
of that.
yeah.
Just walk me
Yeah,
through
yeah.
that.
And my daughter's 16, so she was just 17 when she did it. So you've got to really want it. But swimming's a funny one. If you find a comparable sport to swimming, a lot of people will say like any sort of running or sort of aerobic based fitness stuff. I think it's more like tennis. I mean, the timing and the skill around the whole technique is like 80% of the battle. And then you need the crazy fitness and breathing levels and everything else. So
And are you out there? Are you next to each other? Are you out there together? Or it's just like,
no, you
hey,
go
we'll
one,
just see
one,
you at
one,
the.
one, 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 one. So it's like a relay style thing that you split. But I mean, it's a that's a serious challenge.
Just
Serious challenge.
extraordinary. I
But
feel
that's the
like.
thing. That's why in this world, you're in it as well. You've always got to be just taking on challenges, pushing limits, and it becomes part of your culture and being.
So building in crypto is like a 36K open water swim,
There
right?
you
You
go.
never know
Just
what's going to happen,
you
and
never
you're
know
going
what's
to
going to
be dead
happen.
at the end of it.
There could be
Yeah,
sharks, it could be stuff, it could be
yeah.
anything. You just don't know, but you got to be ready for it all, and you got to be ready to work very, very hard. Yeah.
I am blown away. Thank you so much, Joey, for joining TRM Talks
No, thank
and
you.
really for offering really extraordinary insights today.
Thank you for having me, Mary.
There are so many cool takeaways from the conversation today. I think in large part it's interesting. We've been spending a lot of time thinking about how will traditional financial institutions engage with cryptocurrency, whether it's in the wake of the Genius Act or coming market structure in the US or really just global constructs. But what Joey brought to the conversation was arguably the other side of the same coin. And that is how are native crypto businesses becoming more and more like traditional financial institutions? Essentially, Xapo as a crypto bank has the same obligations to customers, has a lot of the same compliance controls as a traditional financial institution, but is native crypto. So I think that was like one huge takeaway. And the other piece is that as a bank, as an executive as a bank, Joey is not just thinking about financial crime compliance, and he mentioned FATF several times, but also thinking about commingling assets, about different customer due diligence, about compliance sort of more broadly, and really had a unique perspective, I think, on the birth of regulation. I mean, this was clearly someone who was so passionate about Bitcoin from the earliest days and wanted to be part of both the regulatory conversation and the building. So I thought just really unique. A lot of times we'll talk to regulators on this show. We'll talk to builders, executives at banks, and other folks. Joey really brings both to the table, and he brings it in a way where someone with the perspective of someone who is very, very early in the space. On the next TRM Talks, I sit down with former HSI director, Steve Francis. If you love the show, leave a review wherever you're listening to it. And follow us on LinkedIn to get the latest news on crypto regulation, compliance, and investigations.
TRM Talks is brought to you by TRM Labs, the leading provider of blockchain intelligence and anti-money laundering software. This episode was produced in partnership with Voltage Productions. The music for this show was provided by Ecolix.
Now, let's get back to building.